first big tech firm to reach a $4 trillion valuation. This could potentially be right over here because demand, all right, for his new Blackwell chips is insane. Nvidia, NVDA, one of the hottest AI plays right now that's broken a very key important price level. Can there be more upside? Are targets being revised even higher? Hey guys, Joey here, top tier MyZero trader in Philip Securities, and in this video, I'll be talking about Nvidia. I'll be diving into the charts to see where we are, what are some of the new targets, and if we can potentially hit even higher. And before that, we'll dive into the news as well. What are some of the news that came out for Nvidia over the past few days, in terms of what analysts are saying as well. Could there be more potential as well in terms of the revenue, in terms of their growth prospect as well? Let's dive into Nvidia right now. So let's take a look at some of the news that have came out for Nvidia over the past few days. So in Yahoo Finance, you can see that this article written Nvidia to win the race to a $4 trillion market cap. And Nvidia is now the world's second largest company behind Apple, but this might not be long because experts are saying that there's growing confidence that Nvidia, right, this chip giant, will be the first big tech firm to reach a $4 trillion valuation. One of the wealth management CEOs is saying that there's no question about it, right? There's strong demand for its GPU chips, right? And you're seeing early adopters starting to get some ROI. Even Nvidia CEO Jensen Huang has fueled the stock rally earlier this month after describing demand, right, for his new Blackwell chips as insane. One of the portfolio managers from T. Rowe Price also told investors that most people continuously underestimate Nvidia's growth potential. Right, he sees exceptional demand for AI, making it definitely possible for Nvidia to cross the $4 trillion market valuation. So many of Nvidia's customers like Microsoft, Meta, Amazon are kind of fighting for its Blackwell chips now because they want to grow their AI business, AI platforms as well, right? And the strong demand from these customers, and you can see right over here in terms of their earnings result, it does play a part because the Magnificent Seven, right, companies will give investors better insight into Nvidia's market dominance. So Meta, Amazon, Alphabet, Microsoft accounts for more than 40% of Nvidia's revenue. So if many of these companies are dying to get more of its chips, purchasing, increasing their expenditure on Nvidia's chips, definitely it will be a good thing, all right, for Nvidia. Last quarter, spending by Meta, Alphabet, and Microsoft totaled more than $40 billion, while Amazon said spending in the second half of the year will likely surpass the $30 billion spent during the first half. So some of the analysts are seeing this as a generation opportunity, right? It's still very early phase, all right, and because of its customer, what they call top hyperscalers, right? Microsoft, Meta, and these are companies which are pretty much spending, fighting for Nvidia's chips, and this will strengthen Nvidia's position as a leading AI chip maker. So this analyst has raised his price target on Nvidia to about $190. One of the investment managers is saying that you have got several more years of AI investment before you hit saturation or a more maturing AI landscape, right? So you'll see Nvidia revenues double over the next several years, and I think you'll see the stock double over the next 7 years, right? So this is like a once in a lifetime opportunity. Okay, so here's Nvidia, NVDA on the charts right now, $143.71, right? So before I talk about where we are, let me just move back into what has happened over the past 6 months. You can see somewhere over here, we can try to see if there's any similarity, right? So somewhere over here, just in October, November last year, you can see that we were actually consolidating, all right, just below this $50. That was before the 10-for-1 stock split. So the price then was about 400 to 500. It was actually consolidating from like 400 to 500, up, down, and we were in a pretty good uptrend. And somewhere around the beginning of the year, all right, somewhere in 8th of Jan 2024, right, before the stock split, we broke above the 500. Now it's $50, right? That was after the post stock split, but before it was $500, we broke above 500, and the rally really happened, right? It went all the way more than 30-40% in about a month or two, all right? So that was where it broke the very key resistance at that 500. So let's move back into what has happened over the past months. You can see that The past 6 months, we have pushed up and up higher, and we found a very key resistance level as well, right over here, the $140. So that was a very key level I mentioned in my previous video as well. Since in June, we touched about one time, we sold off, we neared it, got a bearish candle, we sold off, attempted to near it as well somewhere in August, we sold off. But what has happened over the past few days is that we have attempted to break above the 140. So it's pretty much at a record high right now. We have a close above the 140 resistance level, whereby we have seen selling over the past 5 to 6 months. So now it's 143, right, which is above 140, right? So that's a very good thing, all right? We could potentially stage this aggressive move up like what we have seen right over here. As I mentioned, right, we broke above the 500. That was in January before it did the stock split, and it rallied all the way up from like about 500 all the way to like about 900. Of course, now it's like 50 to 90, about 80%. So now this could potentially be right over here, because we have actually been consolidating, all right, 5 to 6 months, same thing. I think right over here, 5 to 6 months consolidation. We broke about 500, and now same thing, right? We are consolidating below 140 for 5 to 6 months, and it seems like we are attempting to break this resistance level, right? So I think anything above the 140, it looks pretty bullish, right? Let's take a look at the trend to see what it says, right? So in terms of the longer term trend, in fact, since last year, right, we can see that it has been in a pretty firm long-term uptrend before it broke the 500 level, right? As I said, now it's $50 because they did a 10-for-1 stock split, so 500 divided by 10 is 50. So before it broke the 500 level previously, right, you can see that the longer term trend was up already, right? The 100 days moving average line is up, the 200 days moving average line is up, right? Both red and blue line, they're pointing up, red above the blue. So that's a pretty good long-term uptrend. And when we broke the 500 level as well, you can see the 20 days moving average line started to slope up, right? So that was where the short-term trend turned up as well, right? Very strong rally all the way out until we saw some profit taking, and then you started to see some retracement. So let's take a look at what has happened now, all right, over the past few months. So you can see right now, is the longer term trend up? Well, the longer term trend has been up since last year. I would say that it is still up just by looking at the 100 days moving average line, the red line, and the blue line, right? So both of them are still pointing up. So I think the longer term trend still remains intact. While we were consolidating over the past 5 to 6 months, we saw some resistance at 140, but the longer term trend was still up. But now that we have broken the 140 level, right? So you can see that the short term trend, as represented by the 20 days moving average line. So you can see, right, this 20 days moving average line is points up, flat, down a little bit. So as it points down, it can mean that there's a little bit of a short-term weakness. If it points up, that's where we can see some short-term strength, right? So you can see down, up, flat, and over the past 2 weeks, you can see that this 20 days moving average, this green line, all right, has started to slope up. As I say, right, the longer term trend has been up since last year. That one I think is pretty easy to see, but the short term trend can actually go up and down, right? Because it's more like short term. There's some volatility, there's some profit taking over the past few months. But right now, over the past 2 weeks, you can see that it has started to point up. Right now, it is kind of like still pointing up as we attempt to break the 140 key psychological resistance level. So not too bad. I think targets could be revised higher. We probably found some support around the 110 to 120. So I think used to trade in the like $20 to $30 range. So I think that would be the upside targets that could be revised, maybe all the way up to, conservatively, I would say maybe about 170 to 160. I think that could be kind of like the upside, right? Anything above 140, upside could be all the way to like 160, maybe even to 170, whereby some selling pressure can come back again. That's where you might want to take some profit as well, right? So I think it's good that we consolidate, we push higher, we see a bit of profit taking, maybe a bit of retracements as it consolidates sideways, before attempting to push even higher. That would be a very healthy uptrend, like what we've seen here, right? We have seen a consolidation for like 4 to 5 months before now finally it is attempting to push higher. So that's a very healthy uptrend. It shows that buyers are ready to take it higher to a next phase. All right, next higher targets can be can be raised as well. Targets can be raised. And I think it looks pretty bullish as long as we stay above the 140. So let me just go ahead to turn this red resistance to green in color. So it's only one day, right? So I think the next few days will be pretty crucial, right? Next 1 or 2 weeks will be pretty crucial as well. If you can stay above the 140, that will be a new support level. That will be the base, all right? The kind of like the ground for more upside to actually happen. So there we have it, guys. That is NVDA, one of the hottest AI plays right now. A lot of growth potential, a lot of analysts raising a target price. Technically on the chart, it looks pretty good as well. As I mentioned, you definitely want to put this stock in your watch list. So if you want to know what are my 30 over top US stocks, right, that I have in my portfolio, check out this premium service that I call the Monthly Edge, right? So this is a premium subscription service. So we are running for more than 2 years now. We are currently having a limited time offer. That's where you get my top 30 over US stocks in this secret Google sheet, all right? And every month there'll be 2 new live US stocks that we share with you live in the Zoom call as well, right? So the link's right below. Check out this service. More than 30 over stocks. Nvidia is one of the stocks inside that we've covered since last year, all right? Pretty impressive run up already. But there are more than 30 other stocks that you want to focus on as well, especially if you're going for the longer term. All right, these are pretty much stocks that you want to put in your portfolio to potentially double or maybe even triple your portfolio in the next few years. All right, so Joey here. I hope you like this video on NVIDIA. You have a clear picture of where we are right now, and I look forward to see you in the next video. Take care.